Hi, I'm Bert Nussbaumer from macrobeat.co.uk. Very busy week draws to a close, which we have the US data, US non-farm payrolls out this afternoon, which will be the sort of pinnacle of the week and sum up the week, really. We've seen just another 1,000+ points rally in the Dow. So the equity market and risk FX continues to follow the script in terms of strongly expecting a V-shaped recovery. The problem that we have right now is really that we in this sort of vacuum time for data. We obviously had the horrific data in the past that really were more on a sort of depressionary level. We obviously had the bounce on the first of the reading of the new data that is obviously clear after the lockdown easing and the restart of the economy. But what will really be interesting is be later in June, early July, when we get further data that really allows us to understand whether the market is right of pricing in V-shaped recovery, and if the data will confirm this, or if we actually see that the recovery is taking a lot longer or is a lot slower recovery than what the market is currently pricing. While we are in that vacuum, it seems the market still embraces the 2008 playbook. I still feel that it's, 2020 is not like 2008, but, what do I know? The market is really just embracing the stimulus and everything is running with it. And as I said, only as time goes by will we really see, maybe in a few weeks' time, whether this was right or not. But the first thing I want to look at, the first slide, is going to be the ADP. And that's the sort of closest we get in terms of trying to feel what we get from non-farm payrolls. Obviously, we had expected another 9 million losses, but that was cut down to about 2.76 million, so a lot better ADP. We know that the correlation between ADP and non-farm isn't always that great, but clearly a big surprise in terms of the ADP, which obviously the market would expect to see some similar surprises possibly this afternoon. On the next slide, this is just the expectations of the unemployment rate. Morgan Stanley is going for a 17%. I've been reading on Bloomberg about 20%. So again, will it matter or not? The market has shrugged off 40 million job losses in the last many weeks through the claims and hasn't really bothered about it. So I wonder whether it's 17 or 20, whether it's actually matter, as the market might still believe that whatever the number is, it's going to be the worst case scenario and it's going to only improve from there. On the next slide, we have the euro dollar, and we will look at the dollar index a little bit later on. We had a massive breakout on the euro side, which obviously is a breakdown on the dollar. But since yesterday, we had a big surprise from the ECB for the first time. They actually tried to step ahead of the market and increase their new PEP program by 600 billion, while the market was expecting somewhere between 250 and 500 billion. So that really set the tone for the euro. We had the German stimulus coming through at 145 billion, and we're still going to be talking about this euro bailout story in the next 1 or 2 weeks, which could even fuel this move further, which is a very positive sign for the euro area. We had BTP yields drop from around 1.58% to below 1.4%. So obviously the European or the Club Med bonds took the news yesterday, very bullish indeed. On the next slide, we have the dollar index. We talked about this last week, that I expect the dollar to roll over, and we had quite a sort of intense move on the downside. Maybe it gets a bit sticky around these areas here, but I think the general tone is set for further dollar weakness in the weeks ahead. Last but not least, this is the Aussie dollar, remarkable recovery. We actually already way above the March COVID level, where the big sell-off started in March. We are now approaching the 2020 highs or 2019 highs around 70.30, which is the next key level. That's obviously a double whammy between dollar weakness, as well as the sort of better data in China, the risk rally, and so on and so forth. Which I guess it's going to be a bit sticky, maybe around 70.30, but the trends seem to really follow through on a weak dollar story. This is it from me for this week. Thanks very much indeed. Have a lovely weekend. Thank you. Bye-bye.